Guys, thank you very much. I know you guys are busy, and thank you for being here so we can share our passion of the space with you all. As always, my goal over the next couple of minutes is very, very simple. We're going to talk about client asset allocation, what's happening on the institutional side. And my goal is very simple, is to share with you some of the latest insights we are having, and then let you make your own decision on what the impact could be on your business, on the institutions, but most importantly for you as well, personally as well, as we look at the future of the crypto asset space. My name is Henry Arslina, as was mentioned. I'm the founder of the first Dubai-regulated crypto hedge fund, but I'm also the founder of the biggest crypto compliance services firm in the world called ASX Compliance. And then, where often many people know me, I'm the host of Crypto Weekly on CNBC Arabia, watched by 60 million people each week, where we cover all these crypto topics every week. A couple things we're going to discuss today. By the way, we just got introduced to our panelists. I have to mention a couple of fun facts. Tony, you guys saw from BlackRock, he's been driving the crypto strategy for the last 5 years. One thing you may not know about him, by the way, he's a black belt in karate since the age of 9. So be careful here. If anybody tries to kidnap our crypto folks, Tony is there. And if you're doing this, we're the head of digital assets at DBS Institutional Bank. When she's not busy with crypto at DBS, by the way, she's a makeup artist. So here we go. We all know if you're not busy in crypto, something even more exciting on it. I'm going to come back to Ray, but also when it comes to Chris, before jumping in a trading and crypto world, he was in a parachute regiment in the UK. So you go, a lot of people with military backgrounds. And I'm going to kick it off today with Raihane Sharif Askari, who heads product and research at Grayscale. And when she's not busy with crypto, she paints abstract art. So here we go, like the artistic side. And talking about artistic, I'm going to kick it off with you, Ray. We're talking about allocations. Let's jump right in. The ETF, one of the big stories we had of the year. At Grayscale, I know you guys have been doing a lot of work on this topic. Were you surprised, first of all, that the ETFs were so successful? And when we think about, the audience perspective, what are the products we should expect to see in the next couple of months and years when it comes to ETFs?
Thank you. And thanks, everybody. I'm really excited to be here. I would say that we at Grayscale have been the least surprised because we have been working at this since 2013. Some of you may be familiar with GBTC. That is the product that was the original Bitcoin wrapper. That was a security. We sued our regulator in 2024 to create the first crypto ETF, which was GBTC, and that
sued the regulator. I think it's quite important.
Sued the regulator. We won, and so we have helped to usher in the era of crypto ETF investing. It has been extremely impactful. The ETF wrapper opens up access to the entire advised channel, the wealth channel, and so we've seen so much innovation even since that. We've had our Bitcoin ETFs, Ethereum ETFs have been very successful. And now, as of September, under the generic listing standards, we have the ability to bring altcoin ETFs to market without the 19b4 process. And so we have launched our Solana ETF, we launched our Chainlink ETF, and ultimately, I think we're going to see a lot more products, and we're going to see a lot more demand as investors think about, some of them have and maybe some of you are allocators, have your Bitcoin exposure, maybe you've wrapped your head around Ethereum and smart contracts, and now there's a whole other, 50% of the crypto market cap that is about 50 million tokens, 2 to 5 million tokens more every month. And so we're here to help bring regulated, compliant products that allow allocators to think about that asymmetrical upside in the rest of the crypto market cap.
So you mentioned as allocators looking at these regulated products. Maybe I'll move it to you, Evie. When you come from a DBS perspective, are clients looking at these regulated ETF products to get their exposure, or are they going on Bitcoin spot instruments that the bank offers?
So we started our own exchange in 2020, and the reason for that was because we had a lot of the private banking, we're the third largest private bank in Asia. We had a lot of our private banking clients who were asking to invest in digital assets, but they wanted to do that in a safe way. So when the ETFs came, we did see some clients switch, but a large portion is still in Bitcoin directly, trading through us on a spot basis, but also through structured notes or options, which are also available to them. The advantage of the spot market is that it's 24/7, and while in 2023, 2024, we saw a lot more buy and hold, we've seen a shift where there's a lot more trading this year happening. Asia generally likes to trade, so we've seen that in the coins as well, and the advantage is 24/7. It continues to trade. So we see a bit of both. On the structured product side, I wanted to say we actually give the optionality. We give the optionality to do it on Bitcoin, physical delivered, cash delivered, but also IBIT delivered. So we provide the optionality.
And here for the clients that are looking at this exposure, are they looking at this part of their diversified portfolio? They're putting this as a part of a VC bucket, hedge against debasement? Where are you seeing that capital?
Very good question. So a lot of the investors are non-digital asset natives. They are your traditional businessmen, people who started their own companies, who actually have made their wealth in a very different industry. And for them, it's an allocation of their capital to the space. For many of them, it's
Chris, actually, on this point on allocation. So Brevin Howard has been very interesting. You guys have a fund and there's different buckets in it as well. Like, how do you think investors should think about the role of the crypto in their portfolio, especially on the active management side? There's ETF, we all know, but on the active management side.
Brevin Howard is very early in identifying that this is not just one trade. It's not a narrow set of opportunities, but this is a very broad application of the technology. And so within our approach, we look at both private and public markets, and we look at this through the lens of the technology cycle. The lens of a technology cycle is to think through a number of different phases. The first phase is specific on the technology. You typically have a run-up in price. You then have a price correction. And after that point, you then have applications of the technology. The application of the technology is where most value accrues. And so our approach is to look at not just tokens, but also equity, whether it's private equity, whether it's VC, growth, or late stage, and also listed equities as well. This space is very broad. This technology transition has started, but we're still very early, which means that the institutional adoption will drive more use case of what is effectively a decentralized opportunity, but also a very much deflationary technology. I sometimes get asked, give me a specific example, and how do you think through it? An example is stablecoins. So thinking through how does an active manager and how does Brevin think about making money for investors through stablecoins? There's really three different verticals. The first is the issuer. So the issuer of stablecoins capture net interest margin. And there's been positive regulation in the US to support that. The second is the technology stack. So which technology is used? Some of that technology stack are in publicly traded tokens, but some of that may be private as well. And the third important part is the application of the technology. So through a combination of private markets and public markets, you can capture each of these different verticals with a coherent investment strategy that captures the breadth of the opportunity set.
It's interesting that actually, I'd love to talk about how do you see that value capture. We'll come back to that. You mentioned the institutional adoption and how investors will look at it. I want to move it to you actually, Tony. I mean, BlackRock, man, over the last couple of years went for complete 180 from Larry Fink being super critical of Bitcoin, calling it a scam, to now being the biggest revenue line item of BlackRock, which I find incredible. And it was the most successful ETF in history. I mean, for many people in the room work in organizations that were arguably, very critical of crypto. How was that journey at BlackRock? I mean, having been in it, to see this complete 180?
Yeah, no, thank you, Henry. And I mean, I think you're absolutely right. Like, I think of all the firms out there, the journey from a BlackRock perspective has probably been the most profound and public, right? Everybody's seen this play out. I would say, and we talked about this, is I actually think that's a mark of a great company, an ability to repivot, to rethink, and actually reposition itself as this market continued to develop. And to give you a sense, I mean, I know everybody thinks that perhaps this has all happened in the past couple of years. We've actually been working in digital assets for probably about 10 years now. And it's been a journey, right? We started very early in terms of thinking about what does this technology mean for a firm like BlackRock? And really importantly, where could we add value, particularly from a client perspective? And where we've landed is really coalescing around three key areas as we think about commercial opportunities. So firstly is on the crypto side of things. We just look at crypto assets now as just another asset class. We are obviously building products like the ETF, as you mentioned, but we're also integrating crypto assets in our underlying technology, which I think is really foundational. You think about how we drive access to this is through the application of the technology piece. So that's the first piece. Secondly, and as Chris mentioned, on the stablecoin side, we look at stablecoins as the evolution of money and evolution of value transfer. Where we play an important role is in the reserve management side. That very much aligns to our core ethos in terms of asset management. And then the last piece is in and around tokenization. We're obviously seeing more assets come on chain. The piece for us that has been most profound is how we can use tokenization to create a new distribution opportunity for our products. And I think that's where, from an asset management perspective, we've leaned in. So, I mean, taking a step back, where I think we've been successful has been thinking about this space in almost like a duality, right? We take a crypto asset, you wrap it in a traditional structure like an ETF, you take a traditional instrument like a money market fund, you wrap it in a token. So really what we're trying to do is all about access and build bridges. And I think that's where, from a BlackRock perspective, we've been successful. The one other piece I would mention is we've been doing this obviously globally. We actually announced this morning a partnership with the ADI Foundation and FinStreet. So we're actually looking at how we do more here in the UAE, which I think is super exciting too.
On the stablecoin side, yeah, very exciting actually. Congratulations on that partnership. You just mentioned one thing, and we know you're providing access and trying to bring this TradFi expertise actually in digital assets. Maybe, Evie, I'll move it quickly to you on this point. Like, are there actually best practices that you're seeing now come in the digital asset space? I mean, we all, we've seen the evolution of the space and how it's changed, but because there's a lot of things that probably we don't want from traditional finance, to be honest. And obviously digital assets works way better.
Yes. So when we started, we already adopted the way that we set up our custody, the way that we set up our trading was already following the traditional finance standards. For example, we sign ISDA agreements when we do OTC trades. So that we already set up. But what we also see is a lot more demand because we bank a lot of the digital asset natives. We see a lot more demand in terms of products and services that are existing in traditional finance to have those in the digital asset space as well. So whether it's third-party collateral custody and security agency agreements, or it's just the way that counterparty risk is managed is a big topic which we see. But at the same time, we also see the traditional firms come to us a lot to see, okay, what can we do? How can we use this technology? And how can we propel ourselves into the next generation? And what are things that we have to think about when we deal with this new technology from a technology risk, operational risk point of view? And what are things that you've learned? Because indeed, we've also been at this since 2016. It takes a bit of time to learn. So we see a lot of cross-learning there as well.
On the crossover, so maybe I'll move this to you, Chris. On the crossover side, where I was really wrong this year is we saw all the activity in crypto, ironically, potentially happen on traditional markets. The IPOs of crypto firms, DATs, digital asset treasuries, the ETFs, that were obviously a massive success. Are you surprised of that? Or that there's really the activity happened there and the value creation in many cases happened in traditional markets, not in digital tokens? I'll come back to you after Ray on that point as well.
It hasn't been a surprise. It's certainly fitted within our investment thesis of having this 4-stage cycle and seeing more and more companies through the equity cycle IPO. So that's really a function of having VC through to growth, to late stage, to then IPO. We've seen significant increase in market cap in terms of not just new IPOs, but existing companies as well. And equity is an important part of the story, but we've also seen debt issuance as well. So these are crypto-related companies that are able to access both equity, public equity markets, and also debt markets. There's been a few drivers for this. One has been regulation. So positive regulation in the US, specifically around Genius Act and stablecoins, has set a different tone. We went from regulation by enforcement to positive regulation, and that set a very positive tone for companies coming to the market. We've also had a broad positive risk environment as well in equity markets. And thinking again through the opportunity set in this space, a big part of this is around equity, whether it's private or public. It is not just a story about tokens, and investors are seeing that more. And so this increase in terms of new issuance and new equities creates for us as an active manager more opportunities. We're able to be both long and short these new these new companies, and it highlights that this trajectory of private to public will be a big driver, of value creation going forward.
No, but I think I get the private to public, and I think for a lot of these public companies, we have ways to value the company as well, the things that we've been doing for decades. When it comes to tokens, so you mentioned, for example, before you're launching the ETFs of all the other altcoins as well. How do you guys look for, let's say, people in the room, how should they look at when they come evaluating Solana, XRP and all these tokens? How do you guys value? Because we have that for Chris on the TradFi side, but how are you guys looking at that?
Absolutely. So, in traditional finance for equities, for instance, you have earnings every quarter. In crypto, you essentially have earnings, so to speak, every time a new block is created. So for Bitcoin, that's every 10 minutes. And for some of these newer, more performant blockchains, it can be, inside of a minute. And so for us, we are creating tools and frameworks that take metrics from blockchain. So we're looking at transaction volume, we're looking at other on-chain metrics, and we can use that just the way that investors think about, for instance, EV to EBITDA, to translate what's going on-chain to, and the intrinsic value to market value. And then there's also the idea of, thinking about sector taxonomy. So you think about the taxonomies we have in traditional finance. We've created the grayscale crypto sectors, which takes the investable universe and divides it into 6 crypto sectors based on investable exposure and use case. So the data's out there, it's transparent, and it's just what we're doing is that we're looking at what's going on-chain, volumes, total value locked, and thinking about the metrics that tie that back to intrinsic value, just like investors do for traditional assets.
Chris, do you agree with this from your perspective? I get it on the equity side, but on tokens, do you also believe in this token economics and the way of looking at tokens?
I mean, tokenomics is well researched and well looked at, and certainly the metrics as described here is one angle at which to look at it. When you think about new technology, the lens in which I think about it through is about network and about application. And this is why having a diversified multi-asset approach is really important. I think if we fast forward 5 years from this point, it's difficult at this point to know which of these technologies will be the ultimate winner, which is why you need diversification, you need exposure to the entities and companies that are somewhat agnostic to the underlying technology. And that's our approach, to make sure that returns for investors are not linked specifically to 1 or 2 tokens or 1 or 2 technologies, but capture the broad opportunity set.
Interesting. I think I want to ask you guys afterwards, what's the one advice you have to the room? Before that, Tony, I just want to touch one thing you mentioned before is on tokenization, right? So obviously we're seeing a lot in the space. There's tons of announcements this week on that topic as well. Who do you think is benefiting from tokenization? You think it'll be the institutional investors in the room who will ditch their PPM, subscription docs, and wires and go for it? Or it's the crypto treasuries who are benefiting from it? It's retail. Who's capturing that? Who's getting that value of the access?
I mean, I think there's a number of opportunities. Where we have leaned in and where we see the biggest opportunity is on the fund tokenization side, right? And actually, so Chris and I worked on something 5-6 years ago. So we were probably too early when we started to think about how we could use fund tokenization to create new utility in fund tokens. We're obviously seeing that continue to play out, and it's applicable in things like collateral management and so on. The biggest opportunity, as I mentioned before, is in distribution, right? So we think about the evolution of even the wallet infrastructure. So if we all believe that fundamentally wallet infrastructure will continue to increase, there'll be more applicability in terms of the user base, then I think there's a natural evolution in terms of how do you think about bringing products to the Web3 end of the market? And that's what we've been focused on. If you think about what we've done with our on-chain money market funds, we solved a fundamental problem that existed within the crypto ecosystem where if you were sitting long a stablecoin, that was okay when rates were near zero, but as rates continued to rise, it didn't make sense to sit idly in a stablecoin. We created an opportunity to jump from stablecoin to yield-bearing token in a near instantaneous basis. We solved a fundamental problem for the Web3 end of the market, but we also created an opportunity to bring a traditional product on-chain. I think that's a theme that we're going to continue to see in different exposure types. And for us, and for many asset managers, you need to think through, that's a whole new distribution opportunity that didn't exist a couple of years ago, right?
honestly, I was quite surprised that treasuries became the first tokenized asset at that scale. I thought it was going to be real estate years ago, but again, shows you how things change quite quickly. Guys, we have literally 2-3 minutes left. My best friend, the Bell, is back with me. So I'm going to ask you guys two quick questions, and I want 1 or 2 word answers. You guys are ready? Well, even if you're not, we're still doing it, so it doesn't matter. I'm going to start with you, Tony. We have a lot of allocators in the room. What is the one piece of advice you have to the allocators in the room when it comes to crypto investments?
Don't sit in the sidelines any longer. It's beyond that. So get involved.
Beyond laundering. Evie.
Be mindful of counterparty risk.
Counterparty risk. Ooh la la, this is so institutional.
Don't let the volatility scare you.
Here we go.
Diversification, capture the application of the technology.
Chris, I'm starting with you this one. What industry would you be in if you're not in the crypto industry?
British military.
British military. Wow, nice.
Art and designer or beauty.
I'd be a developer. I'm a computer scientist. I'd be a developer.
Here we go.
I'd like to think I'd be some kind of designer, maybe similar to you, doing some kind of art type thing.
What is the one thing that is exciting you the most right now in the crypto industry? The one thing that is exciting the most, or you're the most bullish on? I'm starting with you, Tony.
I think it's the scale of institutional adoption that we're starting to see.
Yep. Evie?
The excitement of our peers, TradFi.
Here we go.
The ongoing regulatory clarity and favorable backdrop.
Wow, interesting.
Stablecoins and investment opportunity across the 3 verticals.
Chris, I'm starting this one from you. It's an interesting one. With all AI changes going on in crypto, you're seeing all the changes going on in the future of work, future of finance. You're 18 years old today. Would you go to university or you won't? And if you would, what would you study?
I'd go to university. I think AI is super important, but learning how to think and also challenging AI is super important. I think at this point, 2 great technologies, both of which are deflationary. I'd want to go to university. I'd want to understand blockchain and how it can be applied. And I want to make sure I work for a company that utilized it, used the application, and captured shareholder value.
Love it. Ray?
It's a quintessential life experience. I would not give it up.
You would not go to university either?
I would not give it up. I would definitely go to university.
Here we go.
I would go to university and I would continue to study science.
Science, okay.
I wouldn't. I think university and the way we think about education is outdated. So we have to move beyond it. And I think, similar to Chris, the intersection between digital assets and AI is where the future's at.
Starting this one with you, Tony. It's in relation to what you mentioned, Chris. People in the room have kids, and their kids want to start working in crypto. They have the choice between one of these 4 jobs: working in a crypto startup, working in a listed crypto company, working for a consulting firm, or working for a crypto regulator. What job should they take if they want to get into crypto?
I mean, I think there's probably more longevity in a crypto regulator, to be perfectly honest, at this point.
Crypto regulator, here you go.
Assuming they're young, startup.
Startup
Agree, startup.
as well. Chris?
Startup, we need entrepreneurs, we need people that build in the space. And I think it's a great education for kids coming in from university to be in the real world.
This is a funny one. I'm starting with you, Chris. You have the chance to launch a new crypto startup tomorrow morning. You have the choice between these 4 co-founders. Who do you pick? Elon Musk, Changpeng Zhao, CZ's Binance founder who just got the license at EGM, Taylor Swift, or Donald Trump as your co-founder?
So I co-founded a startup called Ivno, which is a tokenization business. I think I'd focus on the team. I'd probably take money from all of them.
All of them. Elon Musk.
I'd probably go with Elon as well.
Elon Musk as well.
I would be the same, to be honest.
Man, Donald Trump and CZ are, Taylor Swift are alone there. And to finish it off, guys, to finish our panel today, I'm starting with you, Tony. My traditional question, whoever comes on stage with me, you have the opportunity to have lunch or dinner with one person dead or alive. Lunch or dinner with one person dead or alive, who do you have lunch with?
I would choose this esteemed panel to have lunch or dinner with.
My God.
There you go.
What are you going to respond after
yes,
this
the
now?
question's been answered.
I think you have to.
Have you who you have lunch or dinner with? One person dead or alive, lunch or dinner with?
I typically say Kris Jenner.
Kris Jenner?
Yes.
Wow, interesting.
I would typically say T.S. Eliot, the poet.
Oh, here we go. And to finish it off, Chris, of how on the topic of assets to allocation or Abu Dhabi Finance for 2025, you have the chance to have lunch or dinner with one person dead or alive who you have lunch or dinner with.
Alan Turing.
Alan Turing. Wow, interesting.
Educated at Cambridge, the founder of computer science, and someone we owe huge credit to in terms of the way this industry has progressed.
Absolutely. Guys, thank you very much. That was our panel. See you guys later. Thank you very much for your attention.